Good afternoon, everybody. Should be live across the board here. YouTube virtual trading floor. We've got Rage Against the Machine tickets tonight, Madison Square Garden. So can't hang around too long today. Gotta try to cut it off by 5. So let's jump on into it. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. I liquidated Google into the close and Peloton into the close. I forgot to take that off. So I do not have Google. I do not have Peloton. Everything's accurate. Everything else is accurate. I sold those right into the close. All right, let's jump on in. All right, so coming into today, especially given kind of yesterday's push through failure in the market, I think we had pretty low expectations. That was the stage I was trying to set for everybody. Know when to be aggressive with your trading because the market's providing you a lot of opportunity. Know when to be more hands off on your trading because the market's not providing a lot of opportunity. It's one of my keys to successful trading that everybody needs to keep in mind. And the message I really tried to get across today was that today was going to be one of the latter. It's the day before the CPI day. We did discuss the potential of a de-risking day, similar to what we saw back here in June, where the bottom kind of fell out of this market and we broke the lower support area of this bullish consolidation that we were in the day before the CPI, which was followed by a terrible CPI number, which I think was followed by a Fed day. So we did discuss that as being a possibility. But the way I kind of presented it in the morning meeting, I said, if I break it down into probabilities, I think the highest probability situation is going to be kind of just a range day on lower volume. The second highest probability would be a bigger de-risking day where we, really sell off and potentially lose some support levels, lose 410, maybe even work our way down to 405. And that the lowest probability situation would be, breaking above yesterday's high, breaking out of this bullish consolidation pattern that we currently find ourselves in for the market. And that higher probability situation really turned out to be the accurate one, maybe coupled with a little bit of de-risking in front of the Fed, particularly when it comes to a lot of growth type stocks, tech stocks. The SPYs here, it's a very small candle, but if you look at the Qs were a little bit bigger, a little bit heavier. The IWM certainly a little bit more downside price action. On a percentage basis here at the end of the day, the S&P is down 0.3%. The Qs are down a full percentage point, and the Russell is relatively weak, being down 1.3%. So you can see, Qs and Russell having a down day in excess of 1%, that there was some de-risking going into tomorrow's trading session. But it's also after a real big run and a technical signal that a pullback should be happening anyway, right? Like this little shooting star candle in the IWM signals a pullback into the equilibrium zone. And even with the Russell being down, 1.3% as of the close, we barely got down to the ADMA on an intraday basis. So, coins out. It's a couple interesting earnings names here. We got Roblox getting smoked. The trade desk is on fire. And what's Coinbase doing? Up initially here. Interesting. Coinbase rev misses. It's trading up. Let's see any of the numbers yet. Revenue fell 31%. Whew. The revenue is light. Stock now back to the neutral point here. Pulled back a little bit after an initial pop. Yeah, anyway, kind of back to the thought process. So it turned into being like a consolidation day, maybe a little bit of a de-risking day, particularly for tech type stocks. Energy stocks were where the relative strength was, but that faded into the close. There were some good opening drive trades in some of these energy names. We were looking to see if energy and financials could have relative strength today, and they did have relative strength, but I wouldn't say they're like really fantastic trading vehicles. You had the insider purchases in ExxonMobil. You had Warren Buffett buying a little bit more Oxy that helped. This opening candle in the XLE was really solid. There's some good kind of opening drive momentum trades in the first couple minutes there for energy stocks if you were focused on them. And then the bigger call out that I kind of made was off of this low, off the low that came in at 945. Off that low with an inside 5 and up after decent follow through should certainly be enough to at least get your risk covered, if not more. And then kind of the bottom fell out in the XLE and it just got pretty washy there. But if we were looking at doing that for XLE was the call out. Also Oxy was better than the XLE. Certainly a leader again with the Warren Buffett news. We mentioned it with ExxonMobil as well. ExxonMobil not as good. Should still be enough to get your risk covered and probably even make money on it. Nothing too fantastic there. Probably the trade of the day though was in this BTU. BTU had a very similar pattern as these XLE names, even though it's a little bit of a different company, more coal focused. The long off of this low, again, kind of similar type pattern as what we were seeing in the XLE. So pull back into this ADMA as it's catching up. It also was getting hit with some solid option flow at that period of time. One of those risk reversals that we don't see too much, coupled with some good call flow that seemed to be coming after it. And this one, unlike most of the energy stocks, the XLE stocks, never actually broke that 945 low that we called the long versus. So that was probably one of the better trades, or maybe the best trade of the day. There was a couple others where we were trying to make something out of nothing a little bit. There wasn't too much going on. We were looking at this AMD into $94. This trade was just tricky though. You wanted like a nice snapback through 94, give a little bit of a further balance, get in this equilibrium area through a price correction. It kind of turned more into a time correction that then led to a little bit of an upside grind. So there wasn't really too much to talk about there. IWM, I did call out the low in the IWM. Mentioned that I thought that this could be a good bounce spot for it as the Russell was getting to the ADMA on the daily for the first time. So you could go long off of this low, but no real extension to speak of, no massive volume increase to make this any type of, certainly not an A+ setup or anything like that. Just trying to make something out of nothing here a little bit, but not overly forcing it either, right? Just finding a couple little trades, not high conviction trades, to try to make a couple bucks for yourself. And even on the downside, I know that I think I called out short off of this bounce back right here, which actually held throughout the entirety of the day for the most part, that high. I don't think it did with the Qs though, right? Qs broke that high. What time is that? I don't remember. It was this pullback at 10:20, right? Did the Q break the 10:20 high? Yeah, they definitely did. They definitely did. But if you did it in the IWM, I think Andy was involved in that. It worked out well. We didn't mention in the morning meeting that if it was starting to look more like a real risk-off day, a real downtrend day, that we could look to short some of these lower highs. So again, worked out a little bit with the IWM, but nothing really to write home about today. I think as far as a spectacular type of trade goes, unless you shorted Bed Bath and Beyond. I did mention at one point earlier in the day that I think it's pretty probable that we'd be seeing Bed Bath and Beyond back at $8 in a day or two. It worked its way all the way down to the low of 863, where it kind of gap filled and bounced a little bit. But that was pretty much it. I'm seeing a question coming out from Austin on Bed Bath & Beyond as I have this chart up. Can you review my short entry on Bed Bath & Beyond at 950 as we broke yesterday's low? It worked out, but was it too aggressive? Is Trade Desk just crushing it right now? Trade Desk 15% now, absolutely crushing it. Sure. So I like that trade actually. The break yesterday's low, which was like I think $10.76, $10.75 from yesterday. So you probably shorted on this bar here. I like that because pre-market this morning and then off the open, it was still holding that 10.75 area as intraday support. I normally don't really like intraday support. You don't really have anything else to go off of, and once it gets below that, then you're into this gap. So I like that as kind of a break lower type trade in a garbage company. It's funny because I used to think it was a decent company, but the numbers have changed, the fundamentals have changed, and what has become kind of a garbage company here that's just been subject to a short squeeze. And if you were following some of the information on the tape, we were seeing a lot of short sellers whack this thing coming in with, 30 to 80K at a time on the offer and peg the offer down. And they were clearly trying to short this thing, and that makes sense to me. If you're a smart short seller, you're probably not getting blown out on this move. It wasn't big enough, and if anything, you're like, oh, this is an opportunity to be able to short more in a garbage company, but you don't do it yesterday. You don't do it yesterday because you don't know how bad the initial short squeeze can be. You do it kind of on the way down after the squeeze is over. And that's just what we've seen in this stock so many times in the past, by the way, where it gives these big squeezes. On a couple occasions, it was after hours. And then when the market opens that day, it's like a perfect intraday downtrend all day. I remember this day. I remember this day. I remember after a 2-day squeeze this day here on March 30th. Price action on the downside felt very similar today. It was, for the most part, pretty orderly until this bottomed out around noon and got a little bit extended and almost fully filled that gap and bounced back. So I like your short. I like your short at 950. I don't know what you were using as a stop loss. The right stop loss just would have been the last pivot high, which would be the 9:45 a.m. high. So, you're shorting like, it's a decent amount of risk. Maybe that's the only thing to not love about it. You got to short like 10.75 and give it to 11.22. So you're taking on like 50 cents worth of risk to probably do it right. T-Money. Good stuff, T-Money. So I like the trade, Austin. Just make sure that the risk was actually appropriate. Your space risk on it was actually appropriate. That's that. What else, gang? Because I don't have anything else to talk about. The market did exactly what we expected, which was not a whole lot, especially if you're looking at the SPYs. A couple decent little trades out there, but for the most part, it was a less is more trading session. It's all about the CPI. We'll really encourage people, if you haven't already, to scroll back into the VTF to just before 4 a.m. Pat posted like a synopsis of what to look for and what to expect from the CPI. Basically, this has become just an extremely important number. I guess there's calls for 0.2% month-over-month increase in total CPI and 0.5% month-over-month increase for core CPI. That would leave year-over-year changes at 8.7% and 6.1% respectively. Interesting because that's down in total CPI, but up in core CPI. And what that accounts to is energy prices coming down, helping to bring down total CPI, whereas rent and owner's equivalent rent have continued to be strong. So that will probably keep the core CPI higher. So interesting to see where it's coming down and where it's not. Traditionally the Fed used to say it was core CPI specifically that they care about. So it's interesting that that's like a worsening number, whereas the total is potentially improving. And if the total is improving entirely based off of energy, that certainly makes me nervous because I don't think you can really count on energy staying low. But then, as Pat Notes goes on to say here, the big thing is going to be the number versus expectations, and the market's really looking for a number that comes in light. And that could be important, and then obviously comes in hot, which it's been consistently hot, right? It seems like every single time we have CPI, it's coming in super hot. So we'll see here if this one's not that way, in which case that maybe helps the market hold its rally, or in the other circumstance where once again becomes hot, then it's just a question of the downside. So it's really interesting to note, like, we had pretty bad CPI numbers that for both of the last two reports, right? And we know what happened on the May CPI number in June. It was just one of the biggest bloodbaths I've seen. Yeah, for sure, Rock. Black or red on the roulette table for tomorrow morning. This sell-off on the June number was like the worst move I feel like I've ever seen on an economic number come out. It was incredibly bad. And then in the July number, when the July number also came in hot, the market actually was able to hold up and react really well. And that was one of the key signals that led to this market rally for the second half of July and the beginning of August was that the number came in bad, but the market held up, completely different than June. But the argument that was being made there was, yeah, even though it was a hot number in July for June, people were already expecting that July was going to be significantly better because energy had already been coming down by the midpoint of the month. So we'll see. Tomorrow, and we're also at much higher prices too, right? So if you get a hot print, we just had this big rally here where stocks are a little bit more expensive, like 13% more expensive than they just were a month ago when that number was coming out. So it's going to be interesting. It's been an interesting year. It's been an interesting summer, right? Usually summer price action gets a little dull. We have the earnings season that we're at the tail end of right now in July into the beginning of August. But usually your summer trading gets pretty dull, and even though there's been a boring day here, a boring day there, today you could argue was a little bit boring. I remember this very low volume inside day on August 4th was kind of boring. For the most part, it really has not been a boring summer. There's still a lot of volatility out there. There's still big moves out there, even on an intraday basis. And, one more brick in the wall tomorrow. We'll see how it goes. What else, gang? Anybody else have anything for today? Otherwise, I'm happy to wrap it up. I said I gotta get ready to rock. Hopefully, I'll still be able to get a good night's sleep tonight. Nothing like a trader going to see a fairly anti-capitalist band. Maybe I should wear my T3 trading shirt to the Rage Against the Machine concert. Yeah, I saw half of it, Pat. I've seen so many like documentaries on Woodstock '99. I'm old enough to remember Woodstock '99 and watching it like on pay-per-view in real time when it was happening. So I ended up like not watching the full thing because I've just seen so much of that. But yeah, it should be a good time tonight. I mean, the band is basically not played in 20 years, with the exception of an occasional show here or there. Yeah, you got it. Does Netflix still look okay? Yeah, Netflix is still in its range. Tried to break out yesterday, failed to be able to do so, partially because of the market. A little bit disappointing, but it's still in that area. We had discussed 228 to 230. Pulled down to as low as 225 today, but at the end of the close, it's still fine. So still looks okay, but the entire picture might change after CPI tomorrow. We'll see. From Mike H here, got an AMD at 1230 on a break above the hammer. Where's the low? Okay. Which failed. Yep. You got another one here at like 1245, 1250. Really kind of two of them, which worked great. Any thoughts on how to not get in too early? I actually think you got in too late. I know that sounds kind of crazy because you're looking at the chart here in hindsight. I actually think you got in too late. I think that the better trade was back in here when Pat was calling it, when you had like 6 down red bars in a row on this 5-minute chart. We should probably be looking at a 15-minute chart also. You got real good extension on the 15-minute chart, which helps. But the downside extension here when it's clearing through 94 and snapping back up, I think that's actually the best trade that's here. Just because this one failed and this one worked, I don't think necessarily means that this was good or this was bad. That this was bad or this one was good. I actually don't like either of them because you don't have the extension on this time frame anymore. I know you still have the 15-minute extension, and this time of day, 15-minute charts are certainly more important than 5-minute charts. So you could make a very valid argument to me and say, hey, Derrick, I agree with you. These tails in the 5-minute, there's no extension here. These aren't that great. It's time correcting, which is technically bearish, not price correcting. But take a look at your 15. Your 15's got solid extension here for a snapback on the 15. It makes it worth it to look for these smaller time frame entries. So that's my biggest, I guess, piece of feedback is that you're too late on the trade, not too early. You really want to have the extension on these counter trend trades, and ideally volume too. Which again, also here your volume was still a little bit bigger. Your volume was kind of increasing on the way down. It maximized on the candle before the bottom that came in, but the bottom low here was still on higher volume. Those are the layers of probability that you want to have. As much extension as you can and as much of a volume increase as you can. For me personally, if I'm looking at this after 15 minutes of sideways price action, or even worse, after 45 minutes of sideways price action, I'm thinking to myself, I'm not sure that I want to be involved in this. This thing's actually starting to make a bear flag. Though you have the tails coming in at $94, and this is a key portion of it too, is daily support. It's daily support from back here on August 3rd. It's your last pivot low. It goes down to 93.62. So that's another thing that's on the side of the trade. But again, now I'm just sitting here right in front of that level. I don't love that. Trying to think if I have any other thoughts on it. Yeah, I think you need to be in earlier. Otherwise, I think these trades are more difficult. Even though this one works, this one doesn't. I don't really see a difference between the two. Hope that helps, Mike. No problem. Next here from Alex. I've been wondering how do intraday moves, pivots, or volume in SPYs, IWM, Qs, or sector ETFs inform your trading of individual names intraday? Do you ever buy, sell, short, or cover trades in individual names because of a move in the index? How do you think through that? Sure. So I'm viewing the indices, which I have to be constantly paying attention to as I trade any individual stocks. I'm viewing the indices as basically a layer of probability or a piece of information on any trade that I'm taking. So I'm not really, this isn't really 100% true. What I want to say to you is I'm not ever making full stock trading decisions based on an index or a sector ETF. It's not always true. Sometimes when like the entire market's in play, you hear us use that term sometimes. Like in those situations, I might end up trading like an Apple just because I know it's so heavily correlated to the SPYs and the Qs, and I'm basically kind of trading the index, but I'm, the indices, but I'm trading Apple. It's probably not ideal. I probably should just trade the index if I think that there's a trade in the index and not trade Apple. But then I might trade the stock if it's showing relative strength. Like I'm trading the index in chart through trading Apple, but the reason I'm trading Apple and not trading the SPYs is because the relative strength in Apple, which is basically part of what was even happening today, right? Apple at one point was very relatively strong, so I do that, but it's not ideal. I think the right way to do it, and the way that I more kind of teach it, and again, what I'm trying to get across to you is I'm always very honest about what I think the right way to trade is, and what I personally sometimes do, which is not always like exactly the textbook right thing that I might teach a newer trader or something as he or she is getting started. The right way to do it is to utilize the sector ETF and the individual indices as a layer of probability for any trades that you're taking. So if I'm looking at trading a stock, but the market I'm expecting is going to be going down or not doing anything like today, well, that's going to be a layer of probability against any long trade in any stock that I take. So I wasn't really looking to do much, long buying today. Like I said in the morning meetings, I thought the indices might be against me. And at the same time, we're calling out trades in the indices, right? I called out the pivot high that came in at 1020. You can see it's still here very clearly with the IWM as something that you could potentially short against if you think that today's going to be a downtrend type of day. Worked okay for the IWM, maybe not so much for the Qs. So I hope that helps. I'm not making my direct trading decisions based on the indices. I'm making my trading decisions based on the game plan I have for the stock that I'm in, but I'm recognizing the importance of this layer of probability. Great question. I think that as of right now, the government is using a set amount. I forget what that amount is, how many millions of barrels it is every month from strategic reserves, and I think that's set to go through October. I think that's correct information. sure there's more, but it becomes a problem to a certain point, right? What else? Gabriel, please. Any other questions today? Otherwise, we can wrap this one up a little earlier. All right, cool. Let's call it then. I'm sure tomorrow's going to be a much more exciting day than today's session. Yet I hope everybody was able to navigate it well. I hope nobody pushed it too hard. Here's a question sneaking in from Hemming. How do you think MACD and Boll, do you think they're useful or not? BOLL, I assume you mean Bollinger Bands. Is that what you're referring to there? I'm not personally heavy on technical indicators. I don't use a MACD, I don't use a Bollinger Bands, I don't even use a VWAP. I just use a few moving averages that are really important to me, and I stick with it. That doesn't mean that I'm against indicators. I think that the MACD can be a very powerful indicator. I know Pat, in the technical portion of his morning note, utilizes Bollinger Bands in there. And when I am reading Pat's technical portion of the morning note, and he references where the stock is in relation to the various Bollinger Bands, I'm paying attention to that as data for my trading. It's all additional data. Or another one is DeMarks. I think everybody here knows Diego is a huge DeMark indicator user. I don't personally have DeMarks on any charts. But when somebody on the team, Diego, and I know Pat uses them a little bit, sees a DeMark setup and is providing that information, I pay attention to it. So I'm not against any of them. Yeah, Niners all day. So I'm not against using any of these. I just think that they need to be used correctly. And the biggest thing I see, or I have seen over my years of trading, is that new traders don't use these indicators properly. An indicator is exactly what that word means. It's something that indicates something. I don't think they're enough on their own. Like I would never buy or sell a stock purely because of any indicator that exists on the planet. They are an additional piece of information or a layer of probability for a trade that you're actually able to find. So if I find that great hammer capitulation buy setup and it's outside the lower Bollinger Band and their appropriate MACD crossover is there and it's giving you a daily, niner from the DeMarks, that's just 3 extra pieces of information that are further validating my trade. So I think that's the right way to use it. You can't overly rely on indicators. They're all very fallible. They can stay in a buy zone for probably longer than you can remain solvent, as an example, like with a MACD or a Bollinger Band. I've got stories about that from traders. You go back to the financial crisis, I'm sure on the way down, we were outside the Bollinger Band a lot, the lower Bollinger Band. It kept going down and down and down. So, again, use them, don't rely on them. Add them as an extra piece of information for your trading. But if you're a new trader, I recommend to not start with them. Learn price action with a couple basic moving averages first. And then when you really understand, good trades and, execution setups, if you want to start experimenting with adding on some indicators, by all means, go for it. But then you might find, like me, that you don't really need them. Again, extra piece of information, a layer of probability. If I like something and Diego's coming in and he's saying, hey, the DeMark's confirming it, that just makes me like it even more. I don't need any of that to profit in trading. But again, it can be a solid extra piece of information. Great question from Hemming. All right, gang. So we'll wrap it up on that point. You all have a fantastic night. I think so too, Mark. You all have a fantastic night, and I'll see everybody in the morning.